Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, Hawaii. It is Tuesday, the 11th day of October, and this is the daily report for gold. We do have gold under pressure this morning. Light pressure, it's modestly lower, about 13 lower, currently trading at 1662 in that area. That would be the spot month, and then in our most active December COMEX you have 1664. We did hit a wall of resistance, and we've been talking about this one particular area, that area being 1680. We did hit that once again, and the market once again backed off. Unable, this I believe is the third attempt we have really gone and tried for that. You can see here I've got two sets of retracements. One is starting from the beginning of the July rally all the way up to the record top. The second retracement starts from the record top and goes down to the end of the correction, roughly 1533. When we do that, the one area, the 61% retracement, and the retracement is, after this market went down, this 61% takes us to 1677. And as you can see, I'll try to make sure that that's straight. But as this market has on multiple occasions attempted to go to this particular area, it has not had the ability on a closing basis to take that out and to push the market higher. That is not something that I consider to be great cause for alarm, because as markets move to different territories, especially new territories, this is not a new or record contract high, but it's moving into new territory that the market has only been at and experienced for a short amount of time. It will take multiple occurrences to take that out. The other way to look at it is the more that this market has difficulty taking this out, the stronger this resistance becomes. So it is something that we absolutely want to pay attention to. You know, I published an article for Kitco. It went live this morning. And one of the points that I tried to make is that in extremely volatile markets, cause and effect, things that we have historically defined as having a certain effect in the market haven't exactly panned out. In other words, we're not seeing that exact relationship. So one of the markets that I'm referring to really is the stock market. What we're looking at right now, they're both weekly charts. One is of the Standard & Poor's 500, the index. The other one is of the spot market of gold. And as you can see, both markets seem to have bottomed over the last few weeks, with gold bottoming about 3 weeks ago. And of course, when we take a look at the stock market, we hit some lows a little bit before that, maybe about a month and a half ago, but that's also giving us bottom activity, and you can see they've both moved higher over the last couple of weeks. Now, that might have to do, of course, with the one market that we're all looking at lately, which is the dollar index. This, of course, is the daily. We're going to go ahead and convert that to a weekly chart, traders. Go ahead and blow that up. And as you can see, the dollar really, which had been very weak, you can see the sign of weakness as it comes in 2010. Here we're in July, and you can see a really strong correlation, because what happened is, as the dollar got weaker, gold got stronger. But now that we've lined all three of them up, you can see really how strong that correlation still is. It's just that we don't see these markets run exactly in tandem all the time. And traders, for our final charts of today's show, I want to express and talk to you a little bit about what kind of goals or expectations I am looking at in terms of this current long position that we're in. Of course, we're in at around 1640. I will be looking to add on dips. I have been very cautious, because every time it's gone to the 1680 over the last period of, let's call it this month, as well as part of last month, since we hit and got this rounded bottom, really ended the correction, we have been unable to take that out. I would probably feel more comfortable actually adding to the position by buying a breakout as it heads to the next level. Well, what's my next level? The next target that we're going to look at is roughly going to be above 1700, and it's going to be around 1722 to 1724. Now, where do I get these numbers from? We have been looking at our Elliott wave count, and when we have been looking at it, really what we have been looking at is the intermediate as well as the major count. And this is our intermediate count, 1, 2, 3, 4, 5, A, B, C. However, realize that within that count, we have a major count. And so for the major count, you have to realize that steps up one. So 1, 2, 3, 4, 5 becomes a single wave, and then ABC becomes a single wave. And when you then look at it through the eyes of the major count, it becomes a little bit different. And here's what I mean. When we look at our weekly chart, we can do that a little bit easier. What you see is as follows. That really this move from July is a one-wave move. So this is your fifth wave. This takes us to major A. Major B is going to be anywhere between 50 and 75% that of A. That's where my targets come from. So we will get a impulse B, and then we'll probably get a final wave down, which is going to be our C. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.